Good day, and welcome to today's Charge Enterprises webcast as part of the Planet MicroCap Showcase. It is now my pleasure to turn the floor over to your host, founder and CEO Andrew Fox of Charge Enterprises.
Thank you, and good morning to everybody that's listening. First of all, I'm Andrew Fox, founder and CEO of Charge Enterprises, and I'm excited today to share with you what I think we have some serious building blocks for success. Just going to start the presentation here with the safe harbor. Everybody knows it, but just sincerely, these are risky investments, and we are doing the best to obviously be great stewards of your capital. So the company history, just briefly, in October of 2020, Charge Enterprises was acquired by something called GoIP. We reversed basically into a public vehicle, and at the time set across what would be a 5-tier strategy to build into Charge Enterprises. You're catching us today at the 3rd tier of that 5-tier strategy, and so I'm going to tell you a little bit today about our building blocks. And so today, as we think about our business, we're connecting people everywhere with communication, infrastructure, and charging. And in the infrastructure space, we focus specifically on the electric vehicle market, in micromobility, and in personal charging. And in communications, it's connected calls. And what does that mean? We have 2 divisions with interlocking capabilities, a seasoned management team, and we're on a run rate to do $500 million in revenue this year. Now, I get bored by a lot of these presentations, and so I'm going to try and make my presentation as short as possible, and ask people to ask Q&A into the Q&A system as often as they want. We have a lot to fill in 30 minutes, and I prefer to hear from people than run you through a presentation that hopefully a lot of you have already seen. But from an investment highlight standpoint, we've got a seasoned management team, very, very focused on what we believe is a gigantic market that today is just evolving. It's a relatively large market, and so our vision is to connect and electrify the future of movement, from connecting calls and Powerbanks to EV charging systems and maintenance. This electric revolution is upon us, and what people don't understand is that the infrastructure to support it hasn't really been built. And so we're doing kind of the unglamorous work in the world of electrification. Our market is very large. It's about a $240 billion marketplace that we're going after. Seasoned team, most of you have hopefully already seen all this stuff, and I really just want to get into kind of the nuts and bolts of our business. Our vision is to establish ourselves as a global leader in installation and operation of EV charging and portable power banks. We believe that we'll also own and operate our own proprietary real estate locations where we'll own and run the electrification systems. And the reason why is because we see incentives in certain areas of the world where it'll greatly benefit us to own and operate. We want to be the most trusted infrastructure company in the world. And the way that we're going to do that is by providing superior hardware, location selection, engineering, installation, most important, maintenance. And so the way that we see our business model evolving is that as the American economy and the global economy continue to shift to electric vehicles, we're the guys kind of doing the really unglamorous work. We're excited about the space. The number of EVs on the road today pales in comparison to what it will be. We're talking about, almost a 17x jump. And larger companies like Volvo are deciding that their entire fleets are going to move electric. So we're just scratching the surface. And if you think about the form factor of charging today, and you think about a lot of the vehicles that are on the road today, this just scratches the surface of where this is heading. And so we're that kind of, group that executes in building this marketplace. And so when you think about the plug-in power stations that are needed to power these cars, whether they're in residential dwellings, apartment complexes, commercial dwellings, or the future of gas stations, we're doing the work that actually puts all that together. And so what does that mean? That means the infrastructure side of it. Our intentions, as I said before, location selection. We come from a real estate background. engineering, installation, testing, and maintenance. All of these are kind of the services part, the unglamorous part of this electric vehicle revolution. And the way that we see it is there's a tremendous amount of friction in the customer experience when purchasing an electric charging system. And so we intend to not only remove that friction, but help accelerate its growth. The unglamorous part that I talked about before, and really encourage people, because I don't want to spend too much time going through this deck, but what we do and the way that we see it is really the work that you can't outsource to a foreign country. You can't use unskilled labor. And so in doing this unglamorous part, we also believe that we're going to be building and training the next generation of workers who might be displaced by a lot of the AI, automation, and driverless technology coming out. And so in doing that unglamorous part, we really believe that we'll be able to create unbelievable jobs in the ecosystem. And if that's important to people in this automation, then they must be very well trained. And so I have a background in that, and I think that that's the part that makes the unglamorous part most valuable to our partners, is that we care about workplace safety and training. So I'm going to try to run through this. Like I said, I hope most of you guys have seen this, and this bores me when I'm on the other end. But this is how we started. We solved a problem. We were early investors in Lime scooters. We saw scooters cluttering up sidewalks everywhere. Our immediate goal originally was to bring this infrastructure to as many markets as possible. Because of COVID, municipalities' priorities changed. And so when those priorities change, we decided that we had to evolve as well. But the good news is we're up in Paris, we're up in Los Angeles. There are lots of cities where this infrastructure is still needed. I still think we might be a couple of years ahead where you'll start to see infrastructure like this in every market that has micromobility. Most people who know our business know that this market grew from 0 to 150 markets in 3 years with no infrastructure. And so we pioneered in micromobility, but we've really grown our business substantially out of micromobility to ensure success for all of our stakeholders in this process. We're introducing something called Powerbanks. It solves a universal problem, which is every single day that someone goes to a restaurant and runs out of juice or runs out of juice on their device. We believe that Powerbanks solve a universal problem. And so you'll see us starting to introduce Powerbanks here in North America. And then from a communication standpoint, this is really our Trojan horse. We see the communication space as an ever-growing space, and we made a very sizable acquisition in this space, and we'll continue to focus on growing communication, providing infrastructure and communications and services. And I really don't want to bore people too much with this because I don't want to spend too much of our time talking about it just because I want to get into Q&A. But we have a very, very simple focus, create a smart TMT company with high EBITDA. It gives us free cash flow to take those investments that we need to make, and instead of being a tin cup public company where we need to constantly ask investors for money, our strategy is to use our communication division as a cash flow vehicle so that it funds and builds our business without having to dilute our shareholders more and more. And as a lot of people know, we raised less than $4 million in equity to build, what is, over a couple of $100 million market cap company. And so we want to be good stewards of capital. And so what we do is we focus on spaces where we can buy for low multiples and add into our existing business stack. And since we have customers all over the world, what our goal is to bring those customers new products and services. And I implore people to go through our deck here, but I really hate wasting so much time on going through decks, and I'd rather get to the Q&A. But as you can see, we have a global reach. Customers, very, very difficult customers to get all over the world. These customers are legacy relationships that we acquired. As a result of that, it was a dormant asset that we've breathed new life into. You'll see before May 15th, hopefully, as we release our first quarter numbers, how impactful this opportunity was for us. and how execution is key. And so I'm excited to get into Q&A now. Once again, from an investment highlight standpoint, we know we started at the bottom. That was our goal, to start at the bottom and build a following with people like yourselves on the phone. But after 6 months of being public and after 2 years of operation, we have a seasoned management team. Annual revenues, it's going to exceed, I expect, hopefully $500 million this year. And we already have a sales presence in 19 countries. So sorry for boring you too much with my presentation. I do appreciate you taking the time. And I see that there have been some questions loaded in, and I would encourage anybody who's on the line to ask any questions through the Q&A system. The first question is, thank you, Frank. Why did we start the business? We started the business, interestingly enough, because of an investment that was made in Lime scooters. It turns out, as an early investor in Lime scooters, we saw this explosive growth where not only did they go from 0 to 100 markets in record time, but they had this revenue that exceeded all expectations. And pre-COVID, it was an unbelievable rocket ship. But we also noticed was there was no infrastructure. So the integrity of city sidewalks were getting compromised with this new form of transportation. And so, we saw this as a global opportunity, but really the first order of business was to build a moat around it. And so what we did was we locked up 4,000 garages across North America as a jumping off point. And so we started the business thinking from a real estate standpoint that location would enable us to place these micromobility charging stations, maybe not today, maybe it was coming tomorrow, but by locking up the multi-exclusive on the space to be the micromobility charging partner, we saw that we could build this infrastructure. What then happened, interestingly enough, like a lot of businesses, is we saw the electric vehicle market evolving. And in the electric vehicle market, what we realized was there's 100,000 charging stations domestically today. We need 10 million over the next 10 years. So there's going to be an unbelievable land grab of building electric vehicle charging stations, not manufacturing them. We don't want to do that. We want to dig the hole, permit it, service it, and maintain it. And then when generation 2 comes out, rip out generation 1 and do the exact same thing over and over and over again. And so we started the business because we saw this huge opportunity to provide infrastructure to the electric vehicle revolution. As I said, we've now pivoted into some other opportunities, but what we see is that the electric vehicle space and the autonomous vehicle space is going to require tremendous bandwidth. And in that tremendous bandwidth, there's so much infrastructure that's going to need to be put in that we'd rather do the unglamorous work of putting in that infrastructure and trying to be the next manufacturer of a product. Next question from Craig. Why did you identify the EV space? I think that, thank you, Craig, for the question. I think the EV space for us evolved from micromobility as an electric vehicle alternative to 4-wheel cars, to 18-wheel trucks, to this massive global shift in a movement to EV that it would be almost criminal to be in the micromobility charging business to not get into the electric vehicle charging business. And I think that what we see in the electric vehicle installation space is that there are a lot of companies that are duking it out to build manufacturing of electric stations. And we have the mindset that we want to be Switzerland. We want to solve the customer friction problem that the electric vehicle car makers and charging guys have now, which is there's friction in the installation. And the variance for installation is significantly higher than the variance in the cost for the actual charging stations. And so if you think about how much is going into electric vehicles, independent of even this infrastructure bill, I think that we had to identify it and we had to move into it quickly. So thank you for the question. You announced Ben Carson Jr. to your board. Why did you make that decision? We have, when we were starting the business, we pitched a tremendous amount of infrastructure funds. And as we pitched these infrastructure funds, we built relationships with really interesting people. Oftentimes, those infrastructure funds, we were too early to actually receive an investment from them. But the principals of the fund, and in this case, Ben Carson Jr., the principals of the fund liked our idea so much that they were like, hey, mind if I put a small investment into your business personally? The fund is not going to be, it's too early for the fund. And that was the interesting part about going to infrastructure funds when we were starting the business, looking for what would be traditional institutional private equity capital, was that the micromobility space itself was really early. And people like Ben really believed in what we were doing and really believed in what the infrastructure, but he wasn't 100% sure from a fund perspective that the stage at which we were in was going to make it. And quite frankly, neither was I. And so we developed a friendship. And as we developed a friendship and he went to the fund, that friendship turned to confidant. And as we were doing and contemplating our, first Pink Sheets and then soon NASDAQ, I wanted to assemble myself with people on a couple sides of the coast who brought a really unique perspective. And Ben gives me unbelievable perspective. Interestingly enough, we also put a former two-time NBA All-Star who is in California, who also brings something very unique to the table. And he has over 150 some odd investments. And we were one of his early stage investments as well. And so I'm trying to surround myself with people who will kick us in the shins as hard as they possibly can, who are successful, and help us build what I believe is the kind of legacy that, investors will want to be a part of. So, yeah. Next question. So I see you announced a letter of intent to acquire an EV installation company. Thank you for the question. Yes, thank you for the question. We announced, I believe, just over 5.5 weeks ago, a very serious LOI. We are right on plan. I'm super excited about it. I wish I could tell everybody everything about it in due time. I know I will be able to. But the beauty of the EV space and my dream, the way that I think of our business in the future is that, every, few minutes a system is being installed and we're instrumental in that installation. I am just as bullish on small cell technology. I am more excited a lot of times by what I see in the communication industry because the valuations of targets are more realistic. The EV targets are very unrealistic, but we're going to be very acquisitive over the next several years to not only build a large enterprise, but to globally be able to provide white glove service in the infrastructure space for clients. And we really believe that we're in the top half of the first inning of the infrastructure game for EV. We think that there are amazing companies out there that are building the hardware like ChargePoint and Blink and Beam, and those CEOs are doing unbelievable jobs. But I think they'd be the first to tell you, as would a lot of the automotive companies, that the friction comes when the consumer actually has to get it charged and installed and get their charging systems installed. And so we aim to work with all of those guys and many, many others to make sure from an infrastructure standpoint is as certain as you can count on the sun coming up tomorrow. When you work with us, you'll know that you'll have that white glove service to install. And so we might not always be the cheapest, and I'm okay with that because I want to build a workforce that is capable of handling this serious work at scale. but that also comes with a commitment that the type of clients that we want to work with are also the clients like us who are pioneering into the EV space. And so our focus on EV installation and small cell installation, will be magnified very soon when this LOI is complete. So next question, and by the way, there's like 21 questions here. I apologize. I'm just trying to read them. I know you started in Micromobility. Why have you pivoted into other areas? Nice question. We pivot in the other areas because there's so much more opportunity in other areas, and we see that Micromobility still is really early on. The electric vehicle movement is a lot more mature, and there are a lot more dollars into it, and so we'll aggressively do that. How is your Q1 quarter? By May 15th, you will find that out. All I can say is that being a public CEO, I want to try and provide you information as transparently as possible. If you haven't signed up for my monthly newsletter, I encourage you to do so. We issue it as a press release anyway, but it'll give you insight into how things are going. Where do you see revenue trending for the next 12 to 24 months? Once again, I think that you'll see both profit operationally and revenue be very, very significant factors for us in terms of our measurement for success. And so I expect to see growth. What is best use of cash on a company's balance sheet? How does the company plan to raise capital? We have a tremendous amount of cash on the balance sheet right now. We do not have any plans presently to raise capital. We're, from an operational standpoint, we're generating operational profits. Okay. What will your market look like in 5 years as a result of using your product or service? Great question. What's interesting is that this copies the services that we provide, and why we're focused on this is it mimics what you see in the cell phone industry. 1G, 2G, 3G, 4G. We're now over the next 3 years we'll be rolling out 5G. We're in 1G right now. We plan on installing as many of those as possible. Hopefully over the next 3 to 5 years, Generation 2 comes out. We rip out Generation 1 and we put out and service and maintain Generation 2. It is what I love most about us focusing on what I consider the pickaxe and shovel part of the Wild West of the electrification movement, and similar to that in the small cell installation movement, which is the more autonomous vehicles that are on the road, the more bandwidth that is needed. The more bandwidth that is needed, the more small cells that are needed. You need specialized companies to both install small cells and to install, electric vehicle systems at the commercial level. And so I see a huge opportunity that we'll be installing, the 6th generation on cell phone technology in 5 years, and we'll be installing probably the 2nd and maybe even the 3rd generation on some electric vehicle charging systems. Who are the emerging competitors in the industry in which you operate? It's interesting because Big Oil has every incentive to fight this. And so they're funding a lot of the emerging competition in the industry. But I think what's interesting about the competition in this particular industry at this point in time, there is so much land to grab that most businesses, whether you're local or regional or even national, there's so much business to go after that the biggest challenge is finding great people. And that's where I think our special sauce is, having done something very similar to this before. What part of business is giving you the most trouble right now? Great question. I think that there's still an uncertainty certainly in the EU where we operate with COVID and vaccines. Most countries in Europe are not back to where they should be. We all know what's going on in Brazil. And so I think that most of the trouble that I'm seeing right now is beyond my control, and we surrender to that. We know it's beyond our control. And so what we're focused on We have operations in 19 markets already. We're focused on expanding that. And as far as the things that trouble us, I think that because they're predominantly out of our hands, we just have to surrender to the fact that, we can only control what we can control. How are you managing or investing in your human capital? Wow, great question. Thank you, Dr. Richards. That's a great question. I mean, in this virtual environment, one of the hardest things to prevent is burnout. And so we're doing everything in our power to mitigate the risk of burnout while we're all seemingly loving working 18 hours a day. But I think that, we subscribe to this theory, which is we are going to treat everybody from the janitor to the CEO like a peer. And for us, peer stands like prompt, ethical, empathy, and reliable. And so when you work with our company, you have to sign up for this ethos that you share those values. And it's not for everybody. It's not for every investor. But for the investors that it is for and for the employees that it is for, it's going to be an exceptional run. And so I think we're, just coming up at the end. I know I didn't get to every question because let me see if I can get a few more in here. What are the challenges that you should be anticipated, or can be anticipated? I mean, there are plenty of challenges that can be anticipated. I think the biggest challenge is that we're in a bit of a nuclear winter. It's why we want to remain operationally profitable through this. And so we think of the equity markets that they've melted up a little bit. And when they melt down, what is that going to do for the space? And so, I think that we are preparing for that every day. We're focused on accretive businesses. We're focused on the infrastructure, the unglamorous side. And I think that that's the challenge that a lot of CEOs are facing right now is that it's been pretty good for quite some time. And what happens when the music stops? And so, we're expecting the worst and hoping for the best in relation to the capital markets, but we also know that we have a multi-generational plan here to build a very, very large global infrastructure company. And so I think that, we just need to focus on the long term and deliver in the short term. So thank you all. I know we're just out of time, and this conference has you booked every 2 minutes on the hour. And so I thank you all for listening. You can reach me at a@charge.us. I encourage you to sign up for our newsletter. And if you have any follow-up questions, please don't hesitate to reach out to our team. Thank you again, and have a great day.
Thank you. This does conclude today's webcast. Thank you for your participation, and have a wonderful day.